everyone remember Sesame Street word of the day? The word of the day, Sonu, is tariffs. We've talked about them before, but we're going to talk about them a little more here. Welcome to the latest Carson's Take 5. Ryan and Sonu here. We're titling this one Tariffs 101. Sonu, I'll turn it to you in a second. Now, listen, we record this a little early. This is, I believe we call it fluid. It can change. Yes. But President Trump came through with some 25% tariffs on some of our biggest trading partners and hiked a little more on China. Take it away. What exactly did he do? And then we'll talk more about what it all means.
So we have tariffs now. I mean, tariffs are supposed to be a negotiating play. But look, tariffs went into effect last month, 10% tariffs on China. But at that time, President Trump had said, I'm going to impose 25% tariffs on all Mexican goods, all Canadian goods, except for Canadian energy imports. Canada sends us a lot of energy. That will be tariffed at 10%. Last month, he said, no, if these folks do something to, prevent the flow of illicit drugs into the U.S., we'll wait, right? We won't impose those tariffs. But obviously, 1 month has passed. And President Trump's obviously not happy with any progress. And so we've got tariffs now. 25% tariffs, as I said, all Mexican goods, all Canadian goods, save for Canadian energy imports, and an additional 10% tariffs on Chinese goods. So now we're talking about 20% tariffs on Chinese goods, 20% new tariffs. That is double anything we saw just on China from back in 2018, 2019. And
that's where I want to jump in, because we hear like the overall tariff rate of all the stuff that we consume and comes in. It was, correct me if I'm wrong, like 3 or 4%. And now after this, it's going to jump to where potentially? And that's the highest since truly World War II. Is that true?
Yes, that is true. It is close to 2%, the average tariff rate, right? Depends on the goods. Now, it's hard to say like, okay, these tariffs are imposed, let's take an average rate, because who knows, suddenly Americans may stop buying more expensive goods from outside and substitute, right, with goods that are produced in the U.S. Of course, in several cases, we don't have those goods being produced. So that will be, we'll have to continue buying stuff from abroad, which is why prices, could go up. But yeah, the average tariff rate is going to go from something like 2% to maybe about 10%, right? That, like you said, is the highest since since the 1930s and 40s, really.
And that's what obviously scared everyone. We hear this. We hear tariffs are inflationary. I mean, we could talk an hour on this. We don't have that much time. But in theory, they're inflationary, right? I mean, how worried should we be about inflation if these tariffs truly stay, let's call it 10%, like is being estimated?
I'm going to differentiate between inflation and price increases.
Got it.
You put a tariff, think of it as a sales tax increase, right? Put a 25% tariff on my TV or whatever, computer coming from China, boom, instead of $100, now it's $125, right? That's an easy way to think about it. Is that inflation? Yeah, it's a one step up in the price level. But unless we continue to see more tariffs ratcheted higher and higher, we don't see inflation, because inflation is continuous increase in prices, right? But we see a one step up in prices. But that's going to mitigate too, because look, the dollar is appreciated. There's currency impact, there's retaliation. We don't know exactly which goods, it's not like, okay, the producer or the person importing it, like the company importing that computer into the United States, they're the ones who will have to pay the tariff, right? Not the, Chinese company producing the computer.
True.
Then it's a question about, does that company in the US transfer that price increase to the consumer? Does they transfer it to me? So I may not see 25%. Some of it may be eaten by the companies themselves. Margins are high. They may say, you know what, we'll take the hit to our margins.
And I was just watching CNBC this morning, and some smart strategist from Goldman, he was pointing out what you just said. Like they're not going to hike prices 25%. So what does that mean? Profits very well could be lower. And believe me, you can talk to 10 economists, get 10 answers. But if prices are going up that much, the consumer's not going to eat the whole thing. That means business is going to eat some of it. So potentially, if you have tariffs up here, you're going to have a hit to earnings. We have record earnings right now. We've got a really solid earnings season. A lot of companies talked about tariffs, right? But there's a lot of uncertainty. We've seen some issues, I guess we'll say, with the manufacturing data as people are trying to buy some goods before those tariffs come in. Listen, that all might change by the time you listen to this. Just know we're seeing supply chain disruptions, not like COVID. Don't want to go there. But potentially, this is the most uncertainty with supply chain. So there's a lot of things the market doesn't like about the tariffs, mainly the word uncertainty. Sonu, we're almost at the end. What else you want to add about tariffs here for Tariffs 101, the latest Take 5?
I think it gets to exactly like profit margins are high. We have no idea how all this will translate to higher prices, because there's so many dynamics in play, and it doesn't even apply to every good equally, right?
Sure.
Because, these are different companies, not just one company producing every single good. Then we'll have a better idea, but that's not the case. At the end of the day, like the latest manufacturing data came out from the Institute for Supply Management, every single comment in there, every single comment was talking about how there's uncertainty and volatility relative to tariffs. You and I have talked about how this year there could be a potential for animal spirits, right? Like a change and shift, more optimism in a way, right? As policies change, things like that. And I still think some of that could be in place, perhaps as we get more tax policy changes, maybe corporate tax cuts, more other sort of tax cuts from Congress. But that's now in the back half of the year. Federal Reserve rate cuts are in the back half of the year. What have we got in the first quarter? Tariffs. So I think that's putting a little bit of a dampener on animal spirits, and that's why you're seeing market volatility. Doesn't mean we'll have a recession. I don't think we'll have a recession. I don't think we'll have stagflation either. Oil prices are going down. That is not what happens during a stagflationary environment, right? But there'll be volatility.
Well said there. One positive to all of this drama and the stock market weakness we've seen the last couple of weeks, bonds, right? Yields have gone lower. Bond prices have done really well. There was a time not that long ago when stocks and bonds did poorly together. So now, though, we say to stay diversified. We've been preaching that in these Take Fives. Fortunately for the bondholders out there, I say bonds help you sleep at night. We know over the long run, stocks will probably do better than bonds. We know that. But during these volatile time periods, you want bonds to act like bonds, and they are. So that's one positive. One final thing to send us home on this. The first quarter of a post-election year, where we are right now, take a wild guess. It's usually historically not that good. Early after a 20% gain, remember we gained 20% last year in the S&P 500, actually closer to 25%. That first quarter, not that good. Okay, the last 20 years, the first quarter in the S&P 500 has been kind of weakish. So listen, we knew coming into this year, maybe some consolidation, maybe some choppiness, maybe some frustration was going to be potentially what we see. And boy, we're seeing that. But the underlying opinions that got us here, the economy's still solid. I maybe call us glass half full if you want, but we think there's going to be some type of potential positive resolution on these tariffs sooner than later. And all in all, it's still a bull market. But hey, volatility is the toll we pay to invest. That's what we're paying right now. We're paying with some volatility, but things still look positive overall. With all of that, this is your latest Carson's Take 5 with Ryan and Sonu. Hopefully next week we don't talk about tariffs, but we might if it's in the news. We'll see you then. Take care. Thank you.